Hey everyone, welcome back to the channel. My name is Mo, and on Momentum Finance and Investing channel, we talk all about investing, passive income, and building wealth through persistent ETF investing. In today's video, we're diving into the numbers. I'm going to show you exactly how much I receive in dividends from my household investment portfolio of approximately $894,000. Whether you're just getting started, looking to scale your passive income, I think you'll find this breakdown really insightful. So first, let's talk about context. My portfolio consists of three broad-based ETFs. They invest broadly in the entire stock market globally and aim to generate wealth over the long time. Now, with a portfolio of $894,000, you might be wondering, what kind of cash flow does that actually produce? Let's break it down. Last year, my portfolio generated approximately $13,000 in dividend income. And this year, we are on track to generate over $18,000 in dividend distributions. That's an average yield of about 2%. It is a fairly low but solid yield considering the overall focus of my portfolio is not on dividend income and rather the total return of portfolio with a focus on stability and long-term growth. As you can see, my portfolio 1 year return was over 15% and year to date is up by almost 4%. In fact, better than the S&P 500 return year to date. Please remember, the focus of our portfolio is not to create a cash flow, which is why we have not invested in high yields, covered call ETFs, or other such products that pay a very high dividend. Instead, we are more keen in consistent, continuous long-term growth through the total market returns, as we do not need the cash flow right now from our portfolio until at least about 8 to 10 years from today. Our $18,000 dividend income translates to around $1,500 per month, or roughly $50 per day. Keep in mind, dividend income isn't always evenly distributed. Some quarters are heavier than others, especially as the underlying companies held within the basket of our ETFs change their dividend amounts. Our biggest contributors to dividend income are XEQT, as it's our largest position and it's expected to bring in almost 93% of the expected dividend income, followed by VTI and VT, each bringing in approximately 4% of the dividend amount. These holdings combine yield with consistent growth, which is key to long-term compounding. One of the most powerful parts of this strategy is dividend reinvestment. By reinvesting those payouts, we are essentially buying more shares, increasing our future income and potential for portfolio growth without the need to add new capital. Though, to be honest, my wife and I are consistently adding more amounts and more funds to our investment portfolio every single month. And this way, we let it actually compound over time, allowing us to get that much closer to have the ability to reach financial independence, retire early stage when we get to our early 50s. So is the dividend income we make from a nearly $900,000 portfolio worth it? For me, absolutely. The income is consistent, mostly tax efficient, as we have already actually maxed out all of our tax advantaged accounts. And for the rest of it, we have invested our funds into non-registered accounts. Also, we see that the dividend income is consistently growing year over year. And while it's not quite quit your job money just yet, it covers a big chunk of our life essentials and brings us that much closer to financial freedom. Though, as pointed out earlier, we are not really taking any of those money out of our portfolio and rather reinvesting it to let it grow and compound even further. How about you? How much dividend income are you generating from your portfolio and how are you using those funds? Do you spend it, reinvest it, or what? I'd like to hear from you in the comments. If you enjoyed this video, of course, follow us on YouTube and Blossom and give this video a like. Thank you so much for watching this video until the end, and I hope to see you all next time.